moving on to our last session of Saral, that is one that has been awaited since day one, that is boundaryless commerce and the best practices for setting up cross-border and targeting international markets. So this is a particularly special session, and we have the most amazing partners with us today. We have from DHL, we have Mrs. Akanksha Beohar, who's the lead of business development. We have Praveen Vashisht, who's the founder of GExpress. We have John Chiswell from Avalara. And finally, we have one of our oldest acquaintance from Tally, and obviously the expert when it comes to any kind of Tally solutions, that's Mr. Pugalti. Hello, guys. And for the session manager, I'll like to invite my colleague, Mr. Dharmendra. Dharmendra, if you could acquaint our audience with all of the, I'd say, our expert speakers here.
Sure, Anubhav. Thank you. Thank you for introducing me. Hi, everyone. And welcome to our session 7, day 2 of Summit. So I am Dharmendra Yadav, and I take care of business growth at Unicommerce for SCA regions, and I'll be host for these sessions. So in this session, we are going to discuss about boundaryless commerce best practice for setting up cross-border or targeting international market, right? While the earlier sessions helped us to identify the e-commerce strategies and the business growth, so in these sessions, we are going to more focus on the levers setting up the cross borders or targeting international market, right? So let me quickly brief you about the structure of this session. So structure of this session will be presentations followed by Q&A, and each speaker will be giving a presentation for 10 minutes, introducing their services and giving their best case practices, followed by the Q&A sections. Right? And I'll try to take few questions at the end of every presentation if possible. So without any further delay, now let's have a quick introduction of our panelists. So starting with Mr. Pugal. Mr. Pugal? Otherwise, Mr. Pugal there?
Oh, he's on mute. Just a second.
Let's move to our panel. Mr. John, you're there?
Hello, yes, I'm here.
Hi, John. If you can introduce to our audience, that would be great.
Thank you very much. Hello, everyone. Great to be here. My name is John Chiswell, and I'm a cross-border solutions manager with Avalara. Happy to help.
Thank you, Mr. John. Next, we have Mr. Praveen. Mr. Praveen?
Yeah, hi, Dharmendra.
Hi, Praveen. If you can introduce to yourself to the audience.
Yeah, hi. I'm Praveen from Team GExpress. So GExpress is the company who helps sellers to send their goods cross-border. So we are into lots of things: warehousing, fulfillment, last mile delivery, first mile pickup.
Great. So looking forward to your presentations. Thank you. Next, we have Ms. Akanksha from DHL. Akanksha?
Yeah, good afternoon, everyone. My name is Akanksha Beohar, and I'm a part of DHL Express team since last 11 years. Currently, I'm a part of e-commerce business development team at DHL Express. Thank you.
Great to have you on the panel, Akanksha.
Thanks.
Anubhav, is Mr. Pugal has joined?
He actually joined in, but again, just dropped off.
I think there's some technical glitches at Mr. Pugal end. So
I guess we can start off with the panelists. Maybe Mr. Pugal can join.
Sure. Definitely. So thank you guys for your quick introductions. So it's great to have you on our panel. So I think we are now good to start. So for the audience, we don't want to hold back your questions. So what you can do, you can put your question on the Q&A sections and not on the chat box, because we'll be taking questions from Q&A itself. So I would request to put all your question in the Q&A sections, right? So without any further delay, let's start our session, starting with Akanksha.
Yeah, Dharmendra.
Yeah, if you can share your screen and we can.
Okay, you have to give me access, Dharmendra. I'm not able to share my screen.
Anubhav?
You already have the access, Akanksha. Could you check again?
Okay, just a sec. Okay. So can someone put me in a chat if my screen is visible to everyone?
Yeah, we can. It's
Okay.
visible. Yeah.
So good afternoon, everyone. Before I start my presentation today, I would like to share my recent experience with my 6-year-old son. Like other kids, he is also fond of toys. Few days back, he asked me to get him a toy pack. So I told him that all shops are closed and he has to wait for few more days. He replied and I was amazed to hear what he told me. He told me that we will order online and also make payment online. While I was wondering what he was talking about, I realized what shopping would mean for this generation, where shopping would always be on mobile and payment would be virtual. Ladies and gentlemen, today I am going to take you through cross-border e-commerce. In today's webinar, we will help you to understand global e-commerce data, followed by the role of logistics in cross-border e-commerce, and most important of all, how DHL can help you to go online and cater to global population. Let's start with some statistics. Today, every little thing is going via online. In last 7 years, we have witnessed around 8 to 10% of growth in e-commerce industry. However, within 1 month of pandemic in year 2020, we have witnessed around 11% of growth. And that itself shows the kind of attraction that online retail has catched up in 1 year of time. Pandemic changed it all. Let me show you some interesting data on categories that are doing well from last few years. As per Google Consumer Barometer, the fashion and electronic are the most bought product in cross-border e-commerce. Of late, we have seen that other segments like beauty and cosmetics, sporting goods, food and beverages, pet care are the segments that are growing faster than fashion and electronics. So what makes consumer buy from you? Study says that nearly 70% millennials choose an e-tailer based on better customer experience, lower return rate, and faster delivery option. And let me tell you that logistics and delivery is considered as the most problematic pain area in cross-border e-commerce today. There is an assumption, or you can say there is a myth, that motivation for people to buy cross-border is price. However, this is not correct. People buy for many reasons, such as better availability of the product, better positioning of the brand, and trust is also one of the important motivator for consumer to buy. So how would you develop trust in your brand? Well, this depends on the kind of experience you give to your consumer while they navigate the website, checkout page, various consumer reviews, and most important, the way you deliver last mile delivery. These features form your brand and cannot be ignored at all. Study says that 91% shopper leave a website and 45% shoppers abandon cart if faster shipping is not available. Well, if you give faster delivery option with a premium offering, you can expect to grow 1.6 times faster and 70% increase in your cart value. So in short, premium shipping delivery option is required to increase your e-commerce business. I would like to talk about a few reasons as to why partnering with DHL Express is the right step for your business. We are a truly global partner. With one account of DHL Express, you can trade from 700 cities in India to 220 plus countries globally. And that is a kind of reach we give it to your business. Our service would ensure faster delivery with flexibility option on various offerings. Let's understand why these options should be an integral part of your e-commerce business. I will take you through CSB5, on-demand delivery, break bulk express, TAS and DTP services, followed by US FBA guidelines in my subsequent slides. So let's take a look on CSB5. CSB5 stands for Courier Shipping Bill 5. CSB5 is a special mode of clearance for e-commerce shipment where you get best of both the terminal. You are getting faster transit time along with simpler clearance and minimum paperwork that you have to give at the time of pickup. Your business become more compliant, and also you can avail export incentives, as well as you can claim all GST benefit. If you wanted to know more about CSB 5, you can also scan QR code that is displaying in my PPT. So this is all about CSB 5. Let's move into my next slide. So before we will go into our next proposition, which is ODD, on-demand delivery, let's take a look on some worrying facts in cross-border e-commerce. E-commerce trend research states that 20% residential delivery fails on first attempt. 37% recipient blame e-tailer for poor delivery, and more than 50% e-tailers refund delivery charges and pay additional cost. Failure in last mile delivery impact business directly through poor customer rating. Returns, loss of customer is another issue that e-tailer faces. Additional coordination, you have to spend more admin time. All these aspects can be catered by opting our ODD service, that is on-demand delivery. How? Let's have a look. So what is on-demand delivery? On-demand delivery is an automated platform to give flexibility to your buyer in the last mile delivery. Under ODD, consignee takes complete control of delivery. ODD gives buyer more delivery option, therefore lowering your return and enhancing overall customer experience. Isn't it very exciting, ladies and gentlemen? Under ODD, your buyer will get 6 different delivery options. Imagine the kind of convenience you are giving to your customer, building the trust and enhancing overall customer experience. We have also included option to build your brand along with all ODD communication that we send it to the end customer, and we at DHL bear all the costs. How about that? Not only that, we also give integration for your website. So that is all about ODD. So now let's move ahead and let me take you through third proposition, which is hybrid plus break bulk express. Hybrid plus break bulk express is an unique solution by DHL Express to handle multiple shipment on a single day. So let's understand hybrid plus break bulk express by one example. So for example, you are a handicraft manufacturer and you have a minimum 10 order in a day, let's say for USA. Then currently what you are doing, you have to create 10 airwables, 10 invoice, you have to manage custom clear at origin, also as well as destination, you have to arrange for IOR, etc., which is a tedious activity currently. Hybrid Plus consolidate multiple shipment with unique airwable, where all shipment gets consolidated under one master airwable, you can say one mother airwable. Shipment gets cleared in India as a single mother shipment, and after custom clearance, shipment will get connected as a individual baby shipment to various locations. At destination, baby shipments get delivered as an individual packet to your end customer. Since in India, shipment is getting clear under cargo mode, you can avail all export benefit since all the data is available in IceGate. And at destination, since all shipments are getting clear as a baby shipment, so if that baby shipment falls under de minimis value, then there will not be any duty that we will charge to a consignee at destination. So if you wanted to know more about this product, Hybrid Plus Break Bulk Express, I request you to get in touch with DHL Express team to understand more better. Another important aspect of cross-border e-commerce is duty and taxes. So when you ship globally, every country would have various duty calculation and taxes. This makes it difficult for any e-tailer to have total landed cost for his product. Hence, we have introduced TAS. TAS stands for Trade Automation Service. Our Trade Automation Service let you calculate landed cost for all your product in each country and also brief you about necessary paperwork that is required at destination for custom clearance. Once you know the landed cost, you can publish it in your website and collect all inclusive price from your end customer, from your consumer. When shipping from India, you can use our DTP services, duty and taxes paid services, so that no charges are collected from your customer, but instead DHL can bill it back to you in your India account. So to know more about TAS and DTP, I request you to please get in touch with your account manager or DHL Express team. Now let's move to next slide and talk about USA FBA guidelines and support provided by DHL Express team for FBA shipment.
Sorry, Akanksha, to chip in. In the interest of time, I would humbly request you to wrap in a nutshell so that we can have the other speakers to keep their say. Thank you.
I think I have 3 more slides.
No problem. You can wrap it early. Maybe we can shorten the talks. So that will really help. Thank you.
So for Amazon FBA, all FBA shipment should be tagged as a DTP, and DHL will do clearance under DHL bond, and DHL will become IOR. The important point is that only 1 shipment per consignee per day is allowed to qualify under de minimis of $800. As you can see, we are partnered with all major players from each vertical in the e-commerce space, from marketplace to payment gateway to web development platform and ancillary services. So what else? How do you go online? Well, it is very simple. You don't need much. All you need is a GST copy, import-export license, bank account number, AD code number, and that's all. You give document to us, and we will open an account with DHL Express. Let's look at a summary of what we have covered today. We understood that COVID-19 has actually fast-tracked the online retail landscape. Customers' buying habits have changed and will continue to evolve. And hence, it is very important for you as an e-tailer that your cross-border offering is aligned with these expectations. We at DHL will be happy to help you in setting up the process and contribute in your expansion. With this, ladies and gentlemen, we come to the end of my presentation. Please note down the detail of our certified international specialist and their contact detail. On behalf of entire DHL family, thank you very much for joining us today and spending your valuable time with us. Thank you very much. Stay safe. Thank you.
Thank you, Akanksha, for this informative presentation. Before moving towards my next panelist, I just have a quick one question. You mentioned about ODD in your presentation. So if you can just elaborate on that for our audience, that will be great.
Okay, so Dharmendra, basically, I have mentioned in my presentation that as per e-commerce trend research states that due to failure in last mile delivery, e-tailer has to face poor customer rating, return, loss of customer, and unnecessary coordination they have to do. Right. So all these aspects can be created, can be catered by opting for ODD, which means on-demand delivery. So basically, ODD is nothing but it is a value-added services by DHL Express, where we are giving more flexibility to end consumer for last mile delivery. So there are the 6 options that we provide, and buyer can choose from 6 options, and it will ensure that e-tailer will not have return and poor rating from consumer. Thank you.
Got it. Thank you for answering this. Okay, guys, now we'll move to our next panelist, Mr. Praveen.
Yeah, Dharmendra.
Hey.
Yeah.
So over to you now. I'll request our audience, meanwhile, if you have any questions, you can put your questions on Q&A section.
Everybody can see my screen?
Yeah, it's visible.
Yeah. Hi, good afternoon all. My name is Praveen. I'm from Team G Express. So basically, the agenda for the today presentation, I'm going to take you with the major challenges, queries, which normally a domestic seller have who wants to sell their products on the overseas market. So first, we are going to understand what exactly is the market size which we are talking about. So this is the reason that why a domestic seller should go for a cross-border trade, because if we see the numbers, so this is growing day by day, and the demand which we are getting from the cross-border market or the global market is raising every day. So if we talk about the global market, so the main market for anyone is in a US market. Then we have in Europe. Then we have another market which is also coming up these days, which is like South Asia, Middle East, Australia, Japan. So these are also in a new market where you can expand your business and can sell your products. So these are the major challenges which we have for logistics in the country, and as well as for the e-com players. So basically, if we talk about the country, our country is majorly divided by two kind of logistic player. One is in a local small player, which is like unorganized, and second one is in a large international player, which are organized. So what is the difference between that? Because the local small player is the one who's next to your office or next to your lane, but he can provide you good rates, but he would not be able to fulfill your compliance and the other things. So then you will face challenges. And the large international players, they actually having a major focus on the big companies and the big sellers itself. So the major challenges for the MSME, that they are not able to get the right logistic partner. Apart of this, what are the major issues which they face in the starting of or spreading their business to the cross-border is first is the documentation and the custom clearance, because it's very important when you are going to go for the cross-border or an international trade. You need to understand the basic documentation process, that what is the documentation process required, what are the country rules and regulations, and how you can send your products to that global market within a simple ease. So we will, whenever if you have any doubt, we can provide you a documentation and a custom clearance process. So I will take you through about that in the next slide. Second one is an inventory management and a packing. So what is that? Because every country have a different criteria for the packaging, because lots of sellers, what they do, they think that if I'm sending in a shipment in USA with the same packaging, and the same packaging I can use for the Europe also, but that's not the case exactly. Because if you are sending something in US, so US have a different requirement of the packaging, same time Europe have a different requirement of packaging. So for example, so if you are sending in a shipment to USA, so there is a mandate requirement that the country of origin should be mentioned on the box in the product. Same time, when you are sending in a same product in the Europe market, let's say for Germany, so you have a certain requirements as well, which you need to put on your product. Let's say, for example, the country of origin. Second, if you are sending in a textile, so there should be a handling in the washing instruction mentioned on that. So these are lots of things which you need to take care before sending any shipments to the international market. Second one is the inventory management, because yes, you can send, there is two ways to send your shipments, that you can ship your products directly from the country whenever you have an order which is specifically for the B2C customers. But at the same time, when you want to take your international business on the volume side, so you have to store or manage your inventory in that country itself. So for that, you need to take in a third-party warehouse or an inventory management system, where everything is going to be controlled by your laptop or mobile itself. The other major challenges on a return management, because when you are selling in your country, it's very easy to bring that product which is returned by for your customer to back to your office or your factory itself. But when you are selling it internationally, it's not possible, because it is difficult to get any import shipment or getting any international shipments back to the country. So because there would be lots of government duties and taxes which is going to be applicable. So you have to find a place where you can mention you can manage your returns in that country itself. So we at GExpress, we provide you all these basic support, which is like starting from your documentation, your custom clearance, your AD code registration, warehousing service in the major market like US, Canada, Europe, Dubai, Japan, and China. A part of this, we can help you with our WMS system, which is a warehouse management system, which is on a fully automated application, which you can control by your mobile phone or your inventory. So you can see your live inventory with the help of the WMS itself, and that is very much capable to have an API integration with your all major marketplaces. So these are the basically three way which you can use your shipment. So first one is on a sample mode, which is like call for a gift product. So if you have any shipment which is not for a sale purpose, you can use this mode. Second one is on a CSB5. So CSB5 is basically in a courier shipping bill. Okay, so in that case, you can send your MFN shipments or on a shipments which is having a less value, and you can get all the benefit of that. So the benefit is the government incentives and your GST refund. The third one is your commercial mode. The commercial mode is in a mode which is like if you want to grow your business on that scale where you will not have any challenges with the government, with the customs, or then once you receive your payments with the banks as well. So all the major exporters who are sending or major sellers who are sending their shipments from the country, they are majorly using the commercial mode, and this is well advised as well, because in that case you will get a proper shipping bill copy. You will, so by which that would be in a kind of proof for you to which is showing that you have exported these commodity from the country. And also, in case if you have any returns also in the future, let's say for example you have returns in the in that particular country which is like unsold inventory or unfulfillable inventory for you. So if you have a proper shipping bill copy, so in future, in case if you need to import those products back to the country, so the shipping bill is going to help you in that as well. So it is well advised that send your shipment through a commercial value and declare it on a proper value, because what people do, they use in a CSB5 mode, they undervalue their product, but end of the day when the money is going to come in your bank account, then there would be challenges, because to misdeclare or undervalue your value is not going to give you a big scale business. So that not as a permanent solution. So if you guys really want to have a permanent solution, so go for a commercial mode and within a fair value. This is basically a workflow that how a delivery system is going to go with from your warehouse or on your door itself. So when you go for our application, so we have a fully automated application with the name of G-Click. So in that you can control all your first mile pickup, your pricing, your quotation, your custom requirements, your duties and taxes for that particular country. If you want to check any HS code for your product also, you can check from that application itself. So you can track, trace, you can see your invoices, you can pay your bills. Everything is going to be controlled by that, can be do by our application, which is like G-Click. So once you register on the G-Click, then you can schedule a pickup. So this is how the first mile pickup is going to be happen. Once you book that pickup, then the custom clearance, then the consolidation. So we are basically having two kind of consolidation. One is an air consolidation, and second one is an ocean consolidation. So the products which is going to go in a quantity and having like customer is wants to save a cost on the logistic. So it's well advised they can use our ocean consolidation program. So in that, what we do, we consolidate on a weekly basis for different locations for Amazon FBA and the other to our warehouse as well. So right now we are holding 3 major warehouses in USA, 2 warehouses in Europe, one is in UK, one is in Dubai, one is in Singapore, one is in China, and one is in Japan. So these are the location where we are having our warehouse. So if you don't want to sell your products on a particular marketplace like Amazon, so you can sell your products on a different marketplaces and keep your products in our warehouse in that particular country, and we will ship that product from that country itself. So then the destination in-house, clearance, and commercial. So we have both the options. If you want to pay your duties back to the country, so that's in a DDP. And we set up your IOR. So it's something that when you are sending in a commercial shipment, it's another benefit is that we are going to set up an IOR for you. It's not that I'm going to clear that your product in my IOR. So that the IOR would be going to be used by you. So that is again a very good thing, because in case if you have any compliance issue in that particular destination country, you will get benefited about that. So again, as I mentioned earlier, the warehousing, repacking,
Remove
LTL,
this if you
FBA.
can.
So which you can do that, and the last mile, which is the final delivery of your customer or an Amazon FBA. So this is on a basic.
Sorry to chip in, Praveen. Hi, Praveen. Sorry to chip in. So in the interest of time, we have surpassed 1 minute. Would request you to wrap it up fast so that we have the next presenter in line.
Sure. Just give me 1 minute. I'm just going to cover up now. So this is basically like a basic knowledge of every seller should have. One is the nature of cargo. What are the free trade agreements with the country? And this is the digital one. So let's say, for example, what is your commodity? It falls in a DG or not? What is the HS code for that? What is the duties and taxes? And that particular, with whatever particular country you are sending, there would be any agreement with the government, because, you know, if you are going to send any shipments to Europe, there is an agreement with the government. So you can save your duties and taxes if you're sending to Europe. This is the current situation. So what is well advised? What is the COVID regulatory guidelines, your restock limits? These are the major challenges that why you needs to use these things as a warehouse and the other things. This is our strengthening cross-border supply. This is what we are doing, complete cross-border solution. So started in 2016, we have come up with lots of challenges and designed lots of solutions for the Indian sellers. One is trust and reliability. So we have grown up our numbers rapidly. So we are working almost 1,500 plus customers now who are selling on Amazon sellers on the other marketplaces as well. So technology, we are in a very technology driven company. So whatever we do, it's all done by an attack platform. So everything is going to be controlled by that itself. So these are the basically our achievements, what we have done. So we are an Amazon SPN partner. Part of this, we have published on all the recognized publications across the country. So we got awarded as an attempt startup in the country, and we have now achieved almost 1,500 plus customers trust and support. So in case if you have any query, you can reach out to me and my team. So we will definitely going to help you in case if you are going to increase or you're looking for to increase your business in the cross-border trade. Thank you so much for your time.
Thank you, Praveen. Thank you. I think that was a very informative presentation, and I'm sure audience would have taken some key points who are planning to enter in a key cross-border. So I just pick one question before I move to my our next panelist. So now we're talking about the cross-border. So what are the advantage of shipping in commercial mode as compared to sample mode? We have seen people, if they receive some 1 or 2 orders, this dispatch in shipped in a sample mode. So if you can throw some light on this.
So Dharmendra, if you are sending in a commercial mode, the first benefit is like the volume benefit, because it's on a thumb rule of logistics: higher the weight, less the rate. So because in a commercial case, you need to send that shipments in bulk first. Second, you will get all the government incentives, whatever government is offering you. Third, you need not to undervalue your invoice. So whatever is the value which is going to come from that marketplace directly to your account. So that is, you can declare the same thing in that case, because you need not to undervalue your invoice just to save the destination duties and taxes. So you can do that. So you can avoid the challenges which is going to come with your BRC, your bank realization certificate. So a part of this, in case if you have any returns also, because when the customers are sending in bulk, definitely there would be a return. So in case if you have any returns like 100, 200, 500, 1,000, 2,000 pieces, so in future you can bring those products back to the country without duties and taxes if you have a proper shipping bill and a commercial clearance.
Thank you, Praveen. Thank you for answering this. There are lots of more questions, so I would request to stay back. We'll take more questions at the end of the session. Thank you. So now we'll move to our next panelist. So Mr. John. So I would like to invite Mr. John now. Mr. John.
Hello, yes.
Hi, over to you now.
Thank you very much. Okay, can you all see my screen?
Yeah.
Excellent, thank you very much.
Thank you.
So yes, I want to talk to you today about boundaryless commerce, and obviously best practices for setting up cross-border or targeting international markets. A lot of the talks we've had so far today have been from people looking at solutions and ways that you can improve your processes. I wanted to try and take it back a little bit and look at some common mistakes. So looking at things that we've experienced with customers in our history. So from an Avalara perspective, sorry, my screen wasn't moving forward there. As you can see from the detail here, we founded in 2004, and we currently have around 20,000 active customers. 700 is a little under for what we currently have. It's more likely about 1,000 at the moment. 1,000 pre-built integrations with some of the more leading e-commerce sites, such as BigCommerce, WooCommerce, Shopify, Magento, and those sorts of things. And we're currently averaging around about 5 billion transactions per year. And a big key number there is $18 billion in taxes remitted per year. So from that, obviously, you can see we're dealing with quite a large number of customers on a daily basis. And as I say, the reason or the detail behind the discussion today, I wanted to talk to you about some of the common pitfalls that our customers experience and some of the things we've noticed when speaking to customers. We deal with customers ranging in size from startups, literally first experience in international trade, all the way through to tier 1 retail, some of the big household names, multinational companies. And obviously from that, we've got a great experience and a great exposure to some of the issues and problems that customers can face. As I say, literally from starting, putting your toe in the water, all the way up to having been in the market for years and years and years. So the first issue that we come across would be assuming a consistency between countries. Now, every new country your customers order from creates new tariff, import tax, and duty obligations with different rates, rules, and forms. Customs procedures can change at each international border, and compliance in neighboring nations can look drastically different. A really good example is flip-flop sandals. So if you're selling a flip-flop style sandal and it's made of leather, duty rates of 10% in the US and 11% in Canada can apply. But if you're selling plastic or rubber flip-flops, both countries change their rate. In Canada, it goes up to 16%, but in the US, the product is now duty-free. So you can see just from a simple product, there's a vast amount of difference just from changing that simple material. The second is passing the buck down the supply chain. And this is a very, very common issue, and it's one that can cause quite a lot of issue for the end consumer. So it's quite difficult to calculate tariff and duty rates as they can change so frequently. As a result, many companies decide to rely on their transportation and fulfillment providers. Some providers of these services can imply that they can calculate duty rates, but they don't have an obligation to get it 100% correct. So you should be aware that if you fall out of compliance, it could be you as the one who is liable, not the shipping company that estimates an incorrect rate. The truth is that personalized and tailored duty calculation by transportation companies may be for large enterprise level account customers, but for smaller startup businesses, they're only given basic support. So it's good to know that you need to get that right, first of all. And then using outdated information. Obviously, again, as I mentioned, it's quite a lot of data, quite a lot of information and accuracy to get the duty rates correct for your entire product catalog. Once the rates have been calculated for a new country, the rate sticks in your shopping cart system for years and with no updates or monitoring. So there's a huge potential problem here. Rates and taxable products change all the time. If we look at the recent changes implemented by the Trump administration, which is a great example, there were changes to tax and duty rates on an almost daily basis, just for the US. This happens worldwide all the time. A rate that was valid last year may no longer be current, and refused shipments due to unexpectedly high import taxes are likely the results of relying on old rates. Apologies, I'm trying to go as quick as I can. I don't want to get told off for being too slow, so I'm trying to move as quickly as we can here. Next would be misdeclaring and undervaluing your goods. This is a bit of a naughty one, and it's not supposed to happen, but a lot of businesses, especially smaller ones, have done it. It's the act of deliberately undervaluing shipments of goods or misdeclaring one item in order to avoid paying a higher total landed cost. Some instances, some companies, for instance, will fill out a low estimated value, regardless of the actual product value in the shipment, in order to sneak under the duty-free or low-value customs policies. Governments have become wise to this tactic, especially with the changes now around Brexit and other things, and they're starting to crack down on it. Customs authorities have developed profiling tactics that help them target shipments for detailed examination and evaluation. You're more than likely to experience customs delays and also fines and penalties if you engage in this on a regular basis. Next, not researching regulated products, which is a key thing. In many countries, specific products are flagged as regulated and are subject to additional tax. These costs can be quite substantial. For instance, when you're shipping a car to Singapore, duties, special fees, and import tax can cost tens of thousands of dollars, sometimes more than the car itself. In other situations, regulated products can vary from country to country, and we're not always obvious. Sometimes products can be regulated because they need to protect domestic trade. A prime example of this is wooden bedroom furniture imported to the US from China. The subject of this is a duty rate of over 92%, but similar furniture from other countries is considered duty-free. In other situations, products might be illegal to import. Singapore has banned chewing gum from inside its borders, and Nigeria bans almost all imports as a matter of trade protectionism. Then a big one from an Avalara perspective is getting the tariff codes wrong. One of the trickiest and most time-consuming aspects of calculating accurate landed costs is making sure every product in your catalog is correctly assigned a tariff code for each country you ship to. Whilst the first digits of tariff code are harmonized internationally, meaning the first same digits apply to a product regardless of the country it's sending, the last digits vary by country. Making incorrect determinations about tariff codes or trying to use one country's tariff code when shipping a product to a different country can lead to customs delays and unanticipated extra costs. Also, return shipments. Obviously, those surprise charges for your end consumer, they're going to kick that back and your product's going to come back to you from there. The last two would be failing to calculate total landed cost. Obviously, we've mentioned landed cost in some of the previous discussions. It's a great idea to calculate customs duties on your shipments, but failing to consider all of the landed cost, such as VAT and other taxes that can significantly impact the total cost, can be a major issue. It's important to remember that the total landed cost is a combination of several factors, and that the duty rates will only take you part of the way to an accurate landed cost calculation. When you calculate total landed cost, make sure you're taking every factor into account: the value of the order, door-to-door shipping costs, shipping insurance costs, customs duty, and any import taxes. This way, you'll have a comprehensive picture of your costs and avoid any expensive surprises. And the final one is doing it all yourself. Again, another common one which we come up against when we're working from Avalara. Customers trying to get the landed cost right without any expert assistance or any outside assistance. Obviously, the cost of professional tariff code and landed cost determination can be quite expensive, especially if you're a startup. And sometimes customers decide to do it all on their own. But as we've seen from some of the previous slides, there's a lot to take into account, and there's a lot of places where you could go wrong. There are low-cost, reliable alternatives. Avalara, for one, provide professional rate code determination at a low flat rate product per country. Once you're armed with the right codes, our landed cost engine ensures that you get the right determination every time, which quite nicely leads me on to both of the products. The first is our item classification engine, and this is to basically provide you, the retailer, with item codes, HS codes, as they're known, or tariff codes for all of your products. If you follow the flow here from number one, we have basically the seller information. You provide us with descriptions of your products, materials, normal sort of product you would have. And we basically put that into our AI engine, which is an intelligent learning AI engine, which can provide HS codes, the full 8 to 12 digits for any product to anywhere in the world. We have number three, experts as a service, which is a team of around 250 human classifiers who cross-reference and check everything that the AI produces just to make sure it's accurate. And then number 4 on the left, we pass those HS codes back to the retailer, and they're stored on the site for lookup whenever a customer is in their checkout. This links in with the final product, which is our duty and tax calculation, which is at the point of checkout. So as we mentioned, the item classification, we provide you with the HS code, which are stored on your site. And when a customer produces or creates a basket and they go to checkout, they will have the product contents of their basket and the value, which is necessary to create that landed cost calculation. And it will also have all of their HS codes and where they're based. From that, it makes a call to Avalara, and basically we calculate the landed cost for that product and provide that back to the retailer, not directly to the checkout, and the retailer can then choose how they wish to display that to their customer. This provides an upfront and transparent view for the customer. So as we're aware, nowadays customers are more educated. They're a lot more likely to review your terms and conditions and look at the shipping and information on the website. If they don't see taxes and duty, or they're not sure, they're very likely to just drop that basket and bounce to another website. So the ability to be able to display this and be upfront and transparent to your customers is paramount nowadays. And that's me finished. I'll stop there, and I think I managed to keep that within the 10 minutes. I hope I was okay.
Thank you, John, for this lovely presentation and information. I think it would be great help for our audience. So just a quick question for you before I move to our next panelist. Like now we are hearing a lot about the IOSS, the import one-stop shop these days, right? And understand like this has taken in effect recently, I think from July onwards, yes, for non-European companies selling into European Union. So if you can talk about that and how Avalara can help here.
Yeah, I'll try and do it as quick as I can. It's quite a big and complex topic, but we try and break it down and make it as easy as we can. Yeah, as of the 1st of July, the normal distance selling thresholds were removed. Usually, or previously, you had a level where you could sell into a country, and if you were under that threshold, you didn't have to have the tax. They've basically abolished that, and it's now everything that you ship into that destination in Europe. If you're from outside of Europe, that is, you have to pay tax on at the point of sale. And it's basically, it's designed as a simplification. It's for orders up to 150 euros in value. And basically it's just designed to simplify that smaller value trade. Avalara can support with it. We provide registration and filings support. And as I say, once you're able to calculate the local tax, it's just a tax for those destination countries. If you can calculate that, it's as simple as that. You just need to have a third party, or an intermediary as it's known, to act on your behalf to carry out those filings. And basically the simplification is you provide the information of all of your sales to Europe in one return to the intermediary, and they file that return in one destination country in Europe. That destination country then basically shares out all of the tax that's been charged to every destination. Yeah, great. Thank you for answering that. I think my audience would have taken some insights from this. So now I'll move to our, and I request John, if you can stay back, we'll be having a question and session after this sure. End of the session. So now we'll move to our next panelist, Mr. Pugal. So,
Dharmendra. Hi, Dharmendra. Dharmendra, in the interest of time, since we are running very short of time and we need to start the award of a felicitation session sharp at 2:20. So another, we have got 8 to 10 minutes for Mr. Pugal to cover. Maybe sure. We'll not be continuing with the audience Q&A. What we request the live audience is that they can post the Q&A in the Q&A section, and also would request the esteemed speaker to address those questions in the Q&A section, or maybe what they can do the best is they can leave their email IDs and phone numbers, and the audience can reach out to them in person. If they wanted to restrict the email IDs and phone number just to avoid spamming, then they can leave a generic or a group email ID of their company so that this can be addressed. So exactly from now, we have got 7 minutes, but we do not want to do unfair with Mr. Pugal. So we'd humbly request him to wrap the session in 10 minutes so that we are just going 3 minutes overboard. I hope that is fine with you, Dharmendra, as the session manager.
Sure, Mubashir. Will do.
Thank you.
We'll try to wrap up in 10 minutes. Hi, Mr. Pugal.
Sure.
Yeah, hi. Thank you. Good afternoon, everybody. I have a small presentation. Let me just share my presentation. Yeah. Okay. My session, basically, I'm going to cover how technology can help businesses to accelerate and become future ready. Because we have seen in this last 1.5 year, we have seen this pandemic of the century has dismantled every aspect of individual person, businesses, and all those things. So basically, I would be discussing about two very important pillars for businesses where you can now, manage those pillars well, will basically allow you to spread your business to other geographies. Right. So this is kind of a reinforcement of your foundations is what basically I would be covering. So we have this saying that everybody knows money saved is money earned. So what are we trying to do here is basically we are trying to see how you can manage. One is your visible cost and the other one is your invisible cost. How do you have control over this? So the first pillar is basically finance, managing of your finance. The major thing in the finance is basically how do you manage your cash flow. Especially, we have learned a lot of lesson during this pandemic, and we know that every business have gone through some kind of a crisis in this last past couple of months, right? So how do you manage your cost, cash flow? And the second important aspect is how do you cut your cost? Okay, and what are the, and especially in cutting cost, basically I would be talking about how you manage your hidden cost. At least you get a visibility of the which is going to hit your bottom line. And the most important thing is that how do you choose a right technology so that all these things can be managed by the technology and it can be automated so that you get every information at the right time so that you can make an informed decision. So coming to the receivable and payable management, if you see from Tally, Tally has been a technology partner for the MSMEs of our country for over 35 years. And we have been providing technology for supporting business on their management of the finance and the business operation. So coming to the receivable and payable management. So what are the things that we can actually, automate in the system in our Tally, where you can specify a default credit period. And also you can set it up in such a way so that if there is any bills which are overdue, while you are doing a new invoice, how do you get those information? So there are messages, warnings that Tally provides you when you are doing an invoice where an outstanding amount is overdue. You can also specify credit limit. Depending on the party, you can specify credit limit so that the system will stop you from raising any new invoice if the outstanding is exceeding the credit limit. And also, basically you have other kind of a configuration where if you're receiving overdue, post stated check, PDC check, if you're receiving, you can consider that as part of your credit limit thing. So if you see, this is how basically you quickly configure this in the system, where you can specify your credit day, you can specify your credit period, and the credit limit, and also the warning which will basically provide you while you are doing the invoice. So if you quickly see this, this is the warning when you're trying to invoice a customer. If there are any overdue bill which is beyond the credit period, it is going to give you a warning. And the second is, if you are invoicing and if the value of the invoice is going to exceed the credit limit, Tally is going to stop you from making going forward with the invoicing. And unless and until with proper authorization, if you are not going to increase the credit limit, you can never do the invoicing from the system. And apart from the trading receivable payable management, you can also use the bill-wise detail features in Tally for enabling for non-trading account. What are non-trading accounts? You can handle your loan installments. You can handle the multiple salary advances to the customer. All this basically gives you clear visibility on your cash flow management. That is what basically we will be seeing how this is going to help in the better cash flow management. Now, this is what I was talking about, the hidden cost. The amount of money that is being outstanding or being unpaid over and above the credit period, most of us don't assimilate the fact that the kind of interest that we are losing. So we might not charge interest to the customer, but still, do we have the visibility so that you can take an informed decision on any of your credit policy? So the return on the loss of margin by way of return on investment can be tracked through a very small and simple feature of Tally, which is interest calculation, where by enabling automatically, system is going to tell you what is the amount outstanding and what is the rate of interest, the potential loss of the interest which is going to hit your bottom line. And by doing this whole system of bringing the controls on your receivable and payable management, by click of a button, you are going to get a cash flow projection, which will give you, put you on the driver's seat of managing your finances and your business operation better. And not just managing the receivable and payable. So you can also create provisional entry for all the recurring expenses, which is basically going to give this is how you get your projected cash flow statement, considering your receivable, payable, and all your other projected recurring expenses also can be captured. The second pillar is basically optimizing your inventory, which is basically cutting the cost. And all of us know that the more longer the inventory is, your working capital is getting blocked. Okay, and also have a cash flow problem. So what are the things that you can do with our technology for you to have an inventory, a proper inventory management, where you can optimize your inventories? Do you have the visibility on what are the items that are fast moving, slow moving, non moving? So we have various reports where you can actually see this information. The other thing is that, do you know what is the kind of margin that you are making on a particular product? Is the which are the products which are giving you better margin? Not only just on the product. So you have made an invoice to a particular customer. If you want to really know that what is the amount of profit that you have actually earned out of this invoice, you can also view that by just click of a button. And by Tariff also has this purchase order and sale order management, where formally you might not be issuing a purchase order to your customer, but still enabling this and capturing this information will allow you to have a better visibility on what are the committed supplies that you have, and also what are the orders that are required will help you. And you can also specify the buffer stock or the minimum stock order level or reorder level, which ultimately is going to give you a JIT stock, so that you are not going to block your stock for a longer period of time. How does this help in the system? Based on your orders that you are, this is one where you will quickly know what is the item that you are dealing in, and what is the GP that you are making on any given day. Now, this is the report which basically tells you on each invoice. In each invoice, you might be having various items supplied. But if you really want to know what is the profit that you have made on each invoice, this report is going to give you the visibility. And this is where you can manage your JIT stock, just in time stock. By enabling these features, basically it is going to tell you, it will consider all your pending orders, that is your purchase order, sale order. It is going to tell you what is your net available, and based on your reorder level that you have specified for each item, it is going to tell you what is the shortfall, and it will consider your minimum order. And finally, the system is going to tell you, Tally is going to tell you what is the stock that you need to now place order for, so that you are not unnecessarily blocking your working capital on the inventory. So these are a couple of things which are there, and there are a lot more things which Tally brings in. Important thing, since we are talking about the e-commerce and other things. See, the biggest difficulty that the businesses have is the reconciliation of the payments and other things from your e-commerce operators. So incidentally, I mean, like people who are using Tally, there are our partners, who have built in add-ons which can automate all this integration, which automates and integrates your payment and various other e-com finance related aspect into Tally. So I mean, like we have branches in many major cities in Bangalore. So anybody would want to basically explore those add-ons. Probably you can get in touch with our people, in a regional office, and they can guide you to our partners where you can explore and see that how you can integrate uh, your e-commerce thing also. So that's all I have.
Thank you, Mr. Google. Thank
Thank
you
you.
for wrapping the session in a very short span of time. So just quick one question, and then we'll wrap up the session. How to coordinate on the margins on the sales and manage prices as average price fluctuate on different marketplaces?
No, see, basically what it does is that, based on your purchase cost, based on your
Right,
costing. So basically, if you see, Tally has this valuation method, which is average cost. So it considers your average cost and it takes your sale price, and then it is going to tell you what is the margin or the GP that you have actually earned from that particular transaction. So that's how the
right.
system, basically, provides you the information.
Thank you, Mr. Google. Thank you for answering things. So now, in the interest of time, so I'll request all my panelists to put their contact details in chat section, as we're not able to take more questions. So our audience can directly get in touch with you for their questions. So now we have reached to the end of this session. So I would like to thank all my panelists and attendees for joining this session and make it a success. Thank you, everyone.